Welcome back to Golden Roll Radio. We have gold above 1,300, trading in a range, popping between low 1,300s, 1,350, and it's going to try to decide which way to go, as well as the dollar. The dollar is at a very crucial point, and which way it goes from here, I think, is going to dictate a lot of the markets. So we're going to watch for the next few weeks to see which way the dollar goes, and we're going to talk about some of the things that may affect it on this week's show.
You know, that's really where our focus lies. Otherwise, if we were only looking at hot news or geopolitical stressors or central bank discussion, I mean, we'd be on this show for an hour today. But focusing on those metals, Miles, putting up the chart, not a whole lot of price action, but we are down 1.6% this week. And Robert, to your point, dollar up 1.6%. So a really clear kind of one-to-one counter move, dollar versus gold.
Yeah, we talked about that pretty aggressive move up last week in gold, and we saw gold come up into some previous resistance levels set on the last time we hit a high around 1360. So it's not unreasonable over this past couple days we've seen gold trail off. We had the FOMC minutes released from the January 30th, 31st meeting. So while no new information came out, obviously people like to pour through what was actually said or at least reported. So right at about noon today, Mountain Time, where we're at on Wednesday, we actually saw the dollar take a little spike down, and all of the markets spiked up, but they've reversed trends and coming back down. The Dow is down, gold is down, and the dollar's actually popped up. Although I would argue the dollar is seeing some resistance at that 90 or just over 90 level, and we'll have to see if it can actually push past that.
You know, we can sit here and talk about the hawkish talk out of the Fed that you allude to. And yes, are they going to raise rates this year? They're using inflationary numbers as an excuse to do that. They have said for over a year that they would do it 2 to 3 times this year. Powell, I fully expect to do just that. He's had the red carpet laid out for him. It's not going to be some bold move. He's just going to be doing what they've said they're going to do. And so they built the case, right? But that being said, they don't even really, they can dictate their Fed lending rate. They don't really dictate the interest rate markets, right, Robert? I mean, you got to look at the Treasury market to really look at what's going on with interest rates.
And as David pointed out on the commentary this week with Bill King, again, that 2.6% marker on the 10-year yield, we've surpassed that. So according to the Bond King, we're turning into a bear market in bonds because of the bond market, not because of the Fed dictating rates.
Yeah, he says that the bond market's dead in the water, right? So expect interest rates to be climbing, whether it's the Fed raising their rate or not.
Well, and so our listeners and clients don't have to. I spent some time this morning pining over the FOMC release, and I think my favorite part in there is where they're discussing they're leaving interest rates, or they chose to leave interest rates in the same place in January because they're not too worried about the market overheating right now, which obviously with what the Dow Jones has done over the last couple weeks, coming down, a total of about 3,200 points over about 10 days, doesn't surprise me at all that that's not their concern. So I'd argue until we see the Dow showing some aggressive moves up again, if that is going to end up taking place, I don't see Powell raising interest rates probably at least for another month or two, but we'll certainly have to see how the Dow plays out in the meantime.
Like I mentioned earlier with the dollar, everything hinges on the dollar, or at least it seems that way right now. And I'd say that you have indecision in the market, generally speaking, except maybe in the bond market. It's been selling off for a while. But the indecision with where the dollar is going to go from here, not just these 88 to 89 to 90, back to 89 moves like we've been seeing, not just these little daily action moves. I'm talking about the big trend. I think it's at this crucial point. And I'd say it's almost too early to predict which way it's going to go from here. But which way it goes from here is going to indicate what gold does, I think. I think gold is starting to become its safe haven asset as it should be. And I think it's going to be seen more so that way. But I wouldn't be surprised to see it languish here, kind of trying to figure out where to go, just like the dollar and just like some of these other currency pairs.
Well, you compare gold's price today to where we had that pretty aggressive drop and then climb back a week ago on the 14th. So we're just coming into some support levels built off of that price at around 1325. If we hold here, obviously we've had our next target high water mark at about 1375, which would be the high from last year. And then, of course, our low water mark would be 1285, which is built off some previous levels at the end of 2017. So like Robert said, we're kind of right in the middle right here. Gold's doing the stair steps that it's supposed to be doing in this type of market. And anytime we have these sell-offs, obviously looking for opportunity moving into gold. And I'd argue still especially platinum pricing and silver pricing, which both followed suit today with the same type of price moves up and then back down as the dollar found that 90 mark and turned around. So any opportunity we see in the precious metals, we're going to keep adding to positions because we know interest rates are rising on a long cyclical time frame. We also know that the Dow Jones may be finding a high water mark here.
I saw today on the news that market uncertainty has returned, and I started laughing. I thought, what? Here's Robert talking about the uncertainty in the markets. It's like it never left.
Right. Well, and we talked about that with volatility index last week and the week before.
Yep.
Yeah, and something Bill King pointed out today in his report was the Dow and the S&P were kind of flirting between their 20-day and 50-day moving averages and saying that it's going to be watched a lot by traders where the Dow goes, but from there, where the equities go from there. As it potentially breaks down below that 50-day moving average, I think he said it was doing that, and watching for the 20-day moving average to actually come down and break below that 50-day moving average. And I know that's getting kind of technical, but he's pretty sharp and he has some indicators, and those are some of them. So we're at a crossroads, and which way the markets go from here is going to be very important for the next major trend. So that's that with the markets. Moving on to geopolitics, what do you have, Tori?
There is a ton going on, obviously. I don't know that we're seeing any impact on the metals markets yet from the geopolitical scene. Most of it has been centered in the Mideast, which is not a surprise. We do have the Ukrainian and Russian tensions building. You have the U.S. sending another ship there just to pacify the Ukrainians and sort of upset the Russians, and sort of a power play, if you will. But Iran and Israel, a lot of talk going back and forth. Iran and Iraq sort of working some backroom dealings, which, if you'd have told me that 5 years ago, I'd have said, no way, you're crazy. And as far back as I can almost remember, I would say that would not ever be happening. So definitely a sea change there. Saudi Arabia getting some nuclear technology from the U.S. There is a ton going on, but we just are not seeing any impact on the metals markets from geopolitical strains right now, other than maybe of keeping them from turning down sharply.
Well, on all the charts, from the metals to the Dow to the euro to the British pound, I mean, it seems like everything is just doing the opposite whatever the dollar does.
So we're not making any predictions. We're saying, hey, we're watching alongside with you. These are just some things to keep your eyes on this week, and we're as anxious as you are to see them unfold.
So yes, I'm excited to see where the markets go from here. And so I'd kind of challenge the listener here to think about the fact that we are in a place of figuring out where the markets are going to go. We're at a slower point, I would say, in the market's action after this volatility a couple weeks ago in the equities market.
Much
we're
less volatility.
Sitting here watching paint dry with gold. We're watching the dollar just kind of flirt with up or down, not really deciding which way to go after that's been down 14, 15% in the last year and a half. So we're at a place where you don't know what's going to happen yet. And I would say that is the time where you should engage with an action plan. You should have a conversation with your advisor where you should be going if this happens, if that happens, and what to do, how to position.
Yeah, you're absolutely right, Robert. I mean, we can't cover everything in a 10-minute show every week. So if you're interested, we'd love to have a conversation with you guys personally. We also send out information via email. And if we don't have you on our email list, definitely give us a call so we can get you hooked up with that as well.
Please give us a call at 800-525-9556.
So thanks again for listening. If you like what you heard, please click that subscribe button, ring the bell so you can get notifications. Give us a thumbs up and definitely engage in the comments as you do every week. You can also follow us at ICA Gold on Twitter or our website, McIlvaneyICA.com.
Thanks for listening. Have a great week.